Good morning, students, and welcome to the Business and Accounting Studies classes for the grade 10. So, over the last couple of weeks, we did almost eight lessons, and today we are into a new lesson, bank account and the bank reconciliation statement. So, this is a new lesson, and we will be learning about bank account and bank reconciliation statement in this lesson. So we will be learning about different transactions like recording of cash deposits, recording of check deposits, and issuing of checks, dishonoring of checks, and bank overdraft. And we will be learning quite a lot about bank reconciliation statement as well. So, what happened over the last couple of weeks? We learned these eight lessons, and in terms of accounting, we did almost five lessons: introduction to accounting, accounting equation, dual impact of transactions, prime entry book, the cash book, and petty cash book. And today we are in bank account and the bank reconciliation statement. Okay. So what is bank account and why did this bank account all of a sudden it arise? So if you are looking at businesses, businesses are evolving and businesses are developing every day. So we learned about the cash book and petty cash book over the last couple of weeks. Now, what is happening to businesses is when you initially start a business, you do it on a cash basis. And after some time, you understand, okay, my business is going up, so I need to open a bank account. Why do you open a bank account? That is to do your transactions, your business transactions conveniently and securely. And the important thing is once you're going to the bank and opening bank, you have to open a current account. You have to open a current account. Now, some of you might have accounts. Most of these accounts are savings account. But in this case, this is a current account. Okay. Current account, there are few specialties. Usually for the current account, you are not receiving interest, but you are receiving a checkbook. Okay, current account, you are receiving a checkbook where you can issue checks that we will be learning later on in this uh, lesson. Okay, and in terms of accounting, since we are learning about accounting, bank account and the cash book, both of them are considered as asset accounts. Bank account and the cash book, both of them are asset accounts. So when we are treating the bank account, we will be using the same accounting double entry principles that we use for the cash account as well. Okay, so simply we will be using double entry principles that we are using for assets when we are working with the bank account. Okay, so what type of transactions are there in the bank account? Bank account has almost like mainly it has four types of transactions: deposit of cash in the bank, deposit of checks received by the business, and issuing of checks, dishonoring of checks. When it comes to dishonoring of checks, there are two parts: dishonoring of deposited checks and dishonoring of issued checks. So we will be learning about these four types today. And firstly we will look at deposit of cash in the bank, and then deposit of checks received by the business. And we will be learning about issuing of checks and dishonoring of checks in the subsequent parts. Okay, so now you can write down the note. What I would do is I will uh, I will tell the note. So I will give you a small time so you can pause the video and you can write the note. Okay. So put the main heading as bank account and the bank reconciliation statement. That is the name of the lesson. And under that, put a subheading bank account, and then write sort of like question like heading: what is bank account? Okay. Business can conduct cash transactions conveniently and securely by opening a current account in the bank. Similar to a cash book, the bank account in the financial accounting is considered an asset account. Therefore, To treat the bank account, recording of entry should be done according to the double entry principles of asset. So you can take few minutes and complete the note. I will move on to the next slide. Now, the next subheading, put it as transactions recorded in the bank account. Type of transactions conducted through bank current account can be provided as below. Point number 1, deposit of cash in the bank. Point number 2, deposit of checks received by the business. Point number 3, issuing of checks. Point number 4, dishonoring of checks. And under dishonoring of checks, you have dishonoring of deposited checks and dishonoring of issued checks as subpoints. Okay, now we are going to learn the first type of transactions, that is deposit of cash in the bank. Okay, now when you are opening a current account, what is happening is initially you have to make a deposit. First thing, when you are opening a current account, you have to place a deposit in the current account. And secondary, when you are doing business, what happens is you are making payments and you are receiving payments. So you are working with a lot of cash. Once you are doing that, once you are receiving cash, maybe you are depositing it into your current account. Okay, once you are receiving cash, you are depositing into your current account. So deposit of cash in the bank, there are two items mainly. One, the initial deposit when you are opening the current account. Second one is when you are doing the business and when you are receiving the business, then and there in the normal course of business, you may be depositing the money that you receive to the business into your current account. So what happen is when you are depositing cash in the current account, when you are depositing cash in the bank account, bank current account, the balance in the current account will increase, and the balance in the cash account, what will happen? Balance in the cash account will be going down. So this is sort of a like inverse relationship. When the balance in when you are depositing cash in your current account, the balance in the bank account will be going up and balance in the cash account will be going down. You can business එකේ තියෙන drawer එක අරලා ඒ drawer එකේ තියෙන සල්ලි ටික අරගෙන ඔයගොල්ලෝ bank එකට ගිහලා bank එකේ deposit කරනවා. So cash in the cash account will be going down, whereas cash balance or the account balance in the current account or the bank account will be going up. So how to do the double entry? Double entry for this deposit of cash is depositing, when you are depositing cash into the bank account you are debiting, cash account you are crediting. Why? Now you are depositing cash into the bank, and we learned bank account is an asset account. When the bank account balance is going up, that means asset balance is going up, assets are increasing in the business, so we are debiting it in the account as per the double entry principle. And the secondary cash book, what happens? Cash balance is going down, cash is a deposit, cash is an asset, and when asset is going down, we are crediting the account. And as the source document, we will be using the cash deposit slip for the recording of these cash deposit transactions. Cash deposit slip is a source document. What is the source document? Cash deposit slip. Okay. Then what? Then deposit of checks received by the business. Now, first we talked about deposit of cash. Now we are going to learn about deposit of checks received by the business. Deposit of checks received by the business. Now, when you are doing business, what happens is you are receiving cash as well. You might receive checks. Some of your business partners may be doing transactions by checks. Then you might receive checks. Okay. So balances in the bank account of the business will increase when the checks are deposited. Checks from the debtors and cash sales are received, and they are most of the time firstly debited into cash book. Now what happens when we are making payment, when we are depositing checks, or when we are receiving checks, And when subsequently, when we are depositing them in the bank account, the business will increase its checks balance or the accounting balance. Firstly, most of the businesses, what happens is businessmen, they record these cash checks, these checks from debtors and cash sales on their cash book. Now, checks may be from cash sales or it can be from credit sales. If it is a credit sale, they put a future date, whereas if it is a cash sale, so they will put the date today itself and they will give you the check. So when you are doing this check transactions, uh, you may be depositing it to bank later. Firstly, you will record it in your cash book and then you will be recording it in your bank account. එක කියන්නේ මොකක්ද සරලවම කිව්වොත් වෙන්නේ ඔයා checks වලින් ගනුදෙනු කරද්දී ඔයා මුලින්ම ඔයාගේ cash account එකට සල්ලි ටික දාලා ඒ කියන්නේ මුලින්ම සල්ලි ටික ඔයාගේ අර check එක ඔයාගේ draw එකේ තියාගෙන ඊට පස්සේ වෙන්න පුළුවන් ඔයා ගිහලා මේක bank account එකට දාන්නේ. හරිද? එතකොට ඒකට අපි කොහොමද account කරන්නේ? You have to debit bank account, you have to credit cash book. Why do you credit cash book? Because you have firstly initially deposited these checks to your cash book and then you are depositing into bank account. And when you are doing these type of transactions, check deposit slip is used as the source document. Okay. There is another instance. The first instance, be clear, first instance is you are receiving checks and firstly you have recorded it in your cash book. Number one, the first instance, you have received checks and you have recorded it in your cash book and subsequently you are going to record it into your bank account. Okay, then you are recording it as bank account debiting and cash book crediting. Now we are going to learn about the second type of transaction in deposit of checks. Okay. Now, however, if the received checks are deposited to the bank at the time of the receipt, instead of debiting it to the cash book, they can be directly debited to the bank account of the business. Now, what we studied firstly we studied, we are receiving the checks and we are recording it in the cash book. And subsequently, we are recording them or we are depositing it to the bank account. The second one is that we are receiving the cash, we are receiving the checks, and we are directly depositing it to the bank account. We are not recording it in cash books, we are directly recording it to the bank account and we are directly depositing it in the bank current account after the sales. So there the accounting entries are bank account debit, sales account credit. We are debiting the bank account similar as the first instance. We are debiting the bank account and then we are crediting the sales account. Okay. In the first instance, we credited the sales account because we are taking money out of cash book, but here we are crediting the sales account. Sales account is an income account, so we are crediting the account. Okay, let's look at an example. The checks received from the sales amounting to 10,000 was deposited to the bank account immediately. Then the double entry is bank account debit 10,000, sales account credit 10,000. Okay, so what has happened here? They have deposited the amount received straight away into the bank. Okay, so you are debiting the bank account by 10,000 because asset balance or the cash balance is going up. Because of that, you are debiting and amount is 10,000 and sales account you are crediting by 10,000. Okay, do you all have any questions? If you all have any questions, you can WhatsApp me, you can ask on the Zoom. And now the important thing is asking the questions. Asking the questions, getting this clear and moving forward. Why you all are here? Because to learn. Okay, now since we have a small number of people, we have great opportunity to learn. And you can always, if you all are refusing to speak, you all can WhatsApp me, you can message on Zoom and you can simply ask. It could be the theory or it could be something in the context of the business, but outside the theory, you can ask it. So I will give you the answers. So we will move on to the note, deposit of cash in the bank. So I will I will uh, I will spoke out the contents here, then you can write it. Okay. Deposit of cash in the bank. To open a current account, a specific amount of cash must be deposited. Additionally, any cash received by the business is typically deposited into this account. When the business deposits cash into the current account, the balance of the current account increases, while the balance of the cash account decreases. The double entry for the deposit of cash in the bank account is as follows: bank account debit, cash account credit. The cash deposit slip is used as the source document for recording of cash deposit in the bank. The cash deposit slip is used as the source document for the recording of cash deposit in the bank. So you can take a couple of minutes and write the note, put the subheading as deposit of cash in the bank, and you can write the note. Okay, then deposit of checks received by the business. Deposit of checks received by the business. Firstly, we learned about deposit of cash in the business, cash received. Now we are learning about the deposit of checks received. The balances in the business bank account increases when checks are deposited. When checks from the debtors and cash sales are received, they are initially recorded in the cash book as debits. Later, these checks are deposited into the bank. When these checks are deposited to the bank later, double entry should be as follows: bank account debit, cash account credit. The check deposit slip, now earlier we used cash deposit slip. Here we are using check deposit slip. Check deposit slip is used as the source document for recording of check deposit. So you can take a couple of minutes and you can write the note, put the subheading, and then you can write the note. Okay, I will move on to the next slide. I will read this out. So after that, you can take a couple of minutes and write this. Okay. However, you have to write it just under the previous section. However, if the received checks are deposited to the bank at the time of the receipt, instead of debiting to the cash book, they can be directly debited to the bank account of the business. When these checks are directly deposited to the bank after the sales, double entry should be as follows: bank account debit, sales account credit. The checks received from the sales amounting to rupees 10,000 was deposited to the bank account immediately. Now, this is an example. Okay. You can put like example here. Uh, the check received from the sales amounting to 10,000 was deposited to the bank account immediately. Then the double entry is bank account you are debiting by 10,000 and sales account you are crediting by 10,000. Okay, with that, we are finishing off two parts: depositing of cash in the bank and depositing of checks received by the business. So you can pause this video, or you can take a couple of minutes and complete the note. And next we have issuing of checks. Okay, so we will meet in the next part where we will be learning about the issuing of checks. So you can write down this note.